So if my goal for the presentation is to help two types of people. First off, for beginners, you're going to get introduced to why making real estate market work for you is the only way to build long-term wealth via house hacking. For experienced individuals, you're going to get the ability to scale your investing career with a house hacking strategy that you can leverage for your loved ones or the next generation of real estate investors you might be raising. So the next 30 to 60 minutes, goals to show you that market research is the key to unlocking long-term wealth by making the markets work for you and finding the perfect house hack. Well, hi, everybody. Welcome to the webinar. My name is Callahan, and today I'm going to show you how house hacking helps you build extreme wealth in real estate without losing sleep at night by using market research. Now, I'm guessing for a lot of you, it's probably not your first webinar. The first thing I want to mention is that if you failed at building wealth or doing house hacking or doing deals in the past, do not beat yourself up. There is a ton of information out there. It's designed to be confusing, and many times the information overload can keep you from success. It's okay. Secondly, if you've been concerned in the past that you just can't succeed in real estate investing, put those fears to rest. People like Sherrod, people like myself, other investors are here to tell you that you can do this. You just need the right tools and the right people to help explain it. Now, large corporations, large institutional investors want you to think that you need like Fortune 500 connections, weeks of research, data scientists, degree to be successful in real estate using market research. And I'm here to tell you that's completely wrong. They have their own reasons for wanting you to think that, but it's just not true. And if you ever thought that government, banks want you to fail, you're probably right. They don't benefit from you succeeding and becoming financially independent. They need you in debt and they need you in need. But the difference with people like REsimpli and myself and other investors is that we care about your success, truly want to see you living the life of your dreams. And so that's what we're here for today. I know you have a dream to change your future, and house hacking is an amazing way to start that dream and start impacting the lives of your family and all those around you. That's what I help talk about during this webinar. So if my goal for the presentation is to help two types of people. First off, for beginners, you're going to get introduced to why making real estate market work for you is the only way to build long-term wealth via house hacking. For experienced individuals, you're going to get the ability to scale your investing career with a house hacking strategy that you can leverage for your loved ones or the next generation of real estate investors you might be raising. So the next 30 to 60 minutes, goals to show you that market research is the key to unlocking long-term wealth by making the markets work for you and finding the perfect house hack. I'm going to show you the framework that I used to make it simple for you to achieve that result. So first off, who am I? I know, complete stranger coming in this webinar, and over the past few years, I became the Vice President of Due Diligence and Market Research for AM Multifamily, the commercial syndication company with $15 million in assets and another $15 million under contract and currently in progress. I've worked at the Department of Defense as a geospatial analyst, supporting our nation and our warfighters and our policymakers. And I've also purchased a house hack leveraging market research that lets me live for free. It is on track to cash flow $2,400 a month. And most importantly, I've been lucky enough to help other people buy their first properties and start their investing careers. But it wasn't always that way. In fact, just a couple of years ago, I was like all of you sitting at home during COVID-19, watching the world come to an absolute screeching halt. I had just lost half of my net worth in the stock market and threw $25,000 down the drain in a wholesaling company that I didn't know enough to make successful. And I felt that strong weight of not being in control of my real estate investments and, more importantly, my own life. So I knew that if things stayed the way they were, I would never be able to live life on my own terms, and I could forget about building wealth. And as a college student about to graduate, there weren't many easy ways to make money or learn how to start investing, but I wanted to start stacking cash as quickly as possible. But even more than that, what I really wanted was more freedom to spend time with my family back in Iowa, listen to my grandpa tell stories about his glory days running the welding shop. I know those people fill my soul more than anything else. And finding avenues to create wealth while keeping more money in my pocket and being able to leverage things like tax benefits was the type of resources I needed to be able to empower myself to soak up every money I possibly could with my family. So I tried a lot of things to make money, start investing, personal training, property management, wholesaling, and everything I tried ended up costing me more money, mainly because I didn't know how to do it successfully. All these avenues only work if you can apply the right toolkits to them. So each new experiments I tried just got me closer and closer to staying in the rat race as I continue to fail. At about that time, I met some people who were doing massively well in real estate with some of the biggest properties out there in multifamily syndication. So I decided to try my hand at it. But like I mentioned earlier, I didn't have the knowledge or experience that I thought would get people to take me seriously. The only thing I had going for me was that I knew a realtor in Boise who knew some other people in the business. I talked to him, he helped me narrow down my criteria and how to analyze properties in their markets to see if they were good investment. And we actually ended up finding a 96 unit building in St. Louis that accepted our offer. But for that deal, we were buying from a local landlord who had other projects that he needed to work out, needed to get out from this one. And the place needed a ton of work. They had non-paying residents, drugs everywhere, and even a senior citizen daycare being run out of the lobby. And when it came time for the final inspection for signing the contract, we learned the true financials of the property. Our hearts sank. Our price to buy the property was based on the numbers that we just found out weren't accurate. And after trying to negotiate with him based on this new information, he wouldn't budge, and I ate several $1,000s in contractor and travel costs. So almost overnight, that business stopped working, and I was back to being in a failing business with I could either pour more money into or find another way to be successful in real estate and find the good investment strategy that leveraged my limited resources and new secrets to be able to unlock the true wealth building journey that is house hacking. So with just a few months before I was moving to St. Louis, I had lost money. I had no investments, no house hack, and little hope. But what I did have was the power of OPM, other people's mistakes. Now, typically, OPM gets equated to other people's money, but I like using it OPM, other people's mistakes, and by leveraging my own. And by OPM, I mean if I'm talking to 10 people who each have 10 years of experience in real estate investing, and I do the very simple notion of letting my ego get out of the way and listen to them, that I have collectively 100 years of experience influencing the decisions that I make when it comes to what real estate strategies I want to leverage and which ones might not be best for my lifestyle. So by talking to other people in the real estate game who had house hacked, who had done successful flipping, who had been successful long-term holders, who had been successful syndicators, I asked them the question, if you could go back in time, 10x your investing career, what would you have done when you started? And they gave me the big aha moment when it came to house hacking and how to make it successful. They shared with me that they'd added a step in their process from the people that I was talking to, and they personally acquired over 3,800 units in different markets that changed everything for them. And they said it was similar to surfing. That if you want to ride the big wave, you have to find the right beach and you got to get there early. So anytime they found a property that penciled out, they did a deeper market research analysis to find the hidden value of the property market and a specific property's location that no one else could see. They told me that the best deals are the ones where only you can see the opportunity and make the market work for you instead of fighting local trends. So I got super excited immediately. I quickly tried to find a property that I could do a deep dive on, and I found one. I penciled it out, created my market deep dive, and just like that, we had a property under contract, right? And we were closing on it on the morning of my 22nd birthday, my first house hack. That's enabled me to live for free. It's on track to cash flow $2,400 a month in St. Louis, Missouri. And I realized from that experience that the secret to success in real estate wasn't necessarily what the property is for long-term wealth building, but where the property is and where it's going. That simple mindset shift was a secret to buying properties that doubled, tripled, even quadrupled in value over time and creating more wealth. So the three main secrets that we're going to get into from market research. The first one is that a property's location is the #1 predictor of wealth. There are properties, addresses, zip codes, and cities that are worth exponentially more than the surrounding areas, all because of its location. Think for a second. Back in 1965, when your grandma bought a house in Beverly Hills for $35,000, why is that property now worth $1.5 million? Because it's in Beverly Hills. The goal here is to identify properties that make financial sense and are poised to capitalize on the most premier locations available on a street-by-street basis. Second, the wealthiest investors make the real estate market work for them. You want the market to be working for you and not against you. If thousands of people are moving into a city like Austin and massive companies like Tesla and Amazon are investing, the demand for housing is going up, and your ability to successfully invest in a property and occupy it at the level you need to make a successful house hack and not have to pay anything towards your monthly mortgage is exponentially higher than if you're investing somewhere where all the market trends are fighting you. So the goal is to identify localities and markets that have solid fundamentals and projections so we can ride the wave of progress to massive wealth. Third, markets change, and staying blind will cost you. Time changes almost everything, and the real estate market can change extremely rapidly given the right conditions. For example, in the 70s and 80s, I'm in St. Louis right now, but the north city of St. Louis back then was abandoned seemingly overnight, leaving thousands of properties vacant, run down, and there was an open invitation to crime. Property values today still haven't recovered in that area, and you can drive around the streets and find several properties that are in need of complete teardowns. And the city spends millions on attracting investment and trying to do the job of turning the area around. To succeed, you need to have access to consistently updated information and always keep your eye on the markets to watch for golden opportunities or a catastrophe waiting to happen, especially with house hacks. They are unequivocally one of the best ways to start investing careers or to help the next generation start their investing careers. And one of, if not the most important indicator of if that house hack is going to be successful is if you're buying the right location at the right, with the right trends around it. So we're going to dive right into a case study. What does this look like in actuality? We talked some strategy, let's talk tactics. Welcome to 3123 Michigan Avenue. This is 1926 all brick building that has 4 2-bedroom, 1-bath units. These are shotgun style units. So for those who know, the bedrooms are basically all lined up in a row. So it's not two separate bedrooms. You can shut doors to completely close them off. There's one conjoining door that you have to walk through. But they're shotgun style apartments, 1,250 square feet. These are massive 2 bedrooms, but they're very old. This property was purchased for $270,000 using a 3.5% FHA loan down. And I had to spend approximately $7,000 in FHA mandated repairs post-closing to bring it up to snuff and pass inspection. Things like painting, and that was primarily some cosmetic issues with the property. Now, before I bought there, I had spent 10 months analyzing over 65 different potential house hacks, running each of them to see if they made financial sense. That is, do the numbers work out? Looking at things like my principal, interest, taxes, insurance, utilities, internet, landscaping, maintenance, vacancy, and repairs to see if I can move into this property and have it financially pencil. But on the other side of that, I had never been to St. Louis before. I don't know which areas the ones that, one, are going to make a successful investment, and two, in a house hack, you're occupying the property. So there's that added layer of safety and a self-interest that we want to be buying a location that we are willing to live in for a period of time, ideally 2 years, so we can get that tax benefit of avoiding capital gains if we were to sell the following 5 years. So on this very street, on Michigan Avenue in St. Louis, there were 3 active flips going on we bought. There was a high school less than 2 blocks away, several restaurants on South Grand Boulevard less than 4 blocks away, very active social area, low crime, centrally located Tower Grove Park, which is a house tons of events and festivals, nearby gym, and very young demographics. When we bought there, these units were rented for between $450 and $500 a month in 2021 in a major city for a 2-bedroom, 1-bath, 1,200 square foot apartment. Now, if you're thinking to yourself, I have not seen prices like that in 30 years, extremely cheap. I agreed with you. After buying this property and checking the market, I have units currently rented for between $1,000 and $1,150 a month. And I have comps that say I can go up to $1,300 a month for these units. This seller had owned the property for almost 40 years and had done some good work in maintaining it, but had not improved the interiors whatsoever. So when I found this property and it penciled out, when I bought this property, it was barely going to break even by moving in. But by conducting the market research around it, we were able to identify so much upside in this asset that it made so much sense to go ahead and take this property down, especially after 65 different properties we've looked at. So now with this house hack, it's cash flowing right now $1,200 a month while I live for free in it. And it's on track by the next 4 months. It'll be cash flowing for $2,400 a month. On top of that, I've just leased one of these units to an Airbnb arbitrage investment company who will be using these units as midterm rentals, yielding even more cash flow for themselves and with consistent cleanings and cosmetic upgrades to the unit within. Had I bought this property 2 miles to the north, 3 miles to the north, the rents would continue to be depressed. I would not have individual investors approaching me to be able to do midterm rentals from it. And I would not be able to recapture the appreciation of this property as shown and showcased by nearby flips and nearby investment activity that's occurring. Now, to make this happen, I had this all came together with the support of friends and families while still making it a good deal for me. And that's where house hacking is crucial in the sense of you have to get creative with it. For example, when I bought this property, if I had rented it out 3 units and lived in one myself, the numbers did not work. It was going to cost money every single month, and my minimum goal for this was to be able to break even every single month, especially as a poor college student going into the first investment property. So I elected to rent out 3 of the apartments, buy the entire apartment, and rented out my own unit by the room. So I had 2 bedrooms. So I took a buddy from college who didn't have a lot strong plans after college where he was going to go, and offered him the opportunity where I'm going to buy a property. I'm going to buy a 2 bedroom. I'll have a 2 bedroom unit for you. I'll offer you below market rent if you move into one of the rooms in my unit. By doing so, my roommate would get cheaper rent, an updated apartment, lower utility costs, as a low stress living situation. And in return, as the top left photo shows, he helped me out with plumbing projects. And in order to renovate the property over time, for example, I'd pay for travel, lodging, material costs, food, and entertainment for my friends and family to come down and help me swing hammers, implement unit projects, and turn them over. House hacking is an amazing way to start your investing career. And it's crucial that you find creative ways to add value to the people in your life or people you're going to be renting to create a win-win for yourself and them as you start this journey. And within house hacking, there are many ways to get creative. If you're buying a single family home in an up and coming neighborhood that's continuing to improve and increase demand, house hacking could come from I'm going to do one long-term rental for that property, or you could rent it out by the room, increasing your per unit cash flow and turning a property that wouldn't work for you into a property that would. In my case, with a multifamily property, instead of looking to rent out each apartment by itself, can you rent them out by room? Or, as you showcase that market research can help attract other investors to your location, renting out a property to potential Airbnb arbitrager or putting it on Airbnb can help increase that cash flow that you need to make it successful house hack that transitions a property from not even in the realm of possibility all the way to this property is going to be a house hack that cash flows thousands of dollars per month while keeping you for free. Different strategies you can leverage with house hacking makes it an extremely versatile tool that will enable you, for one, reduce your monthly costs when it comes to paying for rent or mortgages, which is crucial. Second, it can allow you to cash flow on top of that, putting money in your pocket to fund your lifestyle or, more importantly, future investments. Third, getting into that house hacks and allow you to capture appreciation in the market, both natural and forced, over time. And lastly, you have the depreciating benefits and tax benefits of being able to own that house hack. And so finding a way to leverage one of several creative strategies to create a house hack opportunity is going to be an amazing way to start creating wealth. And it all hinges on where you're buying the house at. So for this one specifically, when we got there, this is an example of one of the units that we had. Now, we'd had comps in the area that put a 2 bedroom, 1 bath apartment anywhere between $1,100 or $1,000 to $1,300 a month, depending on finishes. And this one, there was peeling wallpaper. You can't see it in the ceiling right now, but parts of the ceiling paint were actually dripping off the ceiling. This is being occupied at that point in time, and it was renting rented for $450 a month. What we did, we put an LVP flooring, new stainless steel stove, new dishwasher, countertops, paint, light fixtures, reglazed the whole bathroom, new vanity, new lights, and focus on the primary value adds in the kitchen and bathroom to make this unit rent for $1,150 a month.
Looks really good, man. How much did you spend on the rehab? I know you did some of the work, but it came out really nice. I like the modern light fixtures and the way you did the kitchen.
Thank you. Yeah, so for this property, I've spent maybe less than $5,000 across the units that I've done of my personal money. Because while I've held this property, every single month of cash flow that we generated, I put right back into a savings account that just accumulated until I had a unit turnover, and I put all the money back into the new unit. And so by doing it slowly,
you were able to recover the entire investment in less than a year. That's
completely
really good. Wow. It's really good, man.
And what that meant was when it came to the units that were currently being occupied, it was strategically extending leases and letting units turn over once cash flow had accumulated to a certain level. So once you had
Yeah.
$6,000 in the bank account, I'm gonna let my target unit expire, have them move out, go in, renovate the property of the unit, get that higher rent, and then I would tactically extend certain units leases based on where I was at in my cash flow situation,
That's really
so I can minimize any out-of-pocket expenses. So by
that's
this
really smart, man.
October,
Yeah, that's
oh,
yeah.
oh, thank you. Go ahead.
Sorry, go ahead.
So by this October, I have two more units that are going to be finished up. I've already done the interiors on one. I've got the bathrooms to do on two more, and the Airbnb midterm rental investors that I'm working with, they've expressed interest in being able to take over the next two as soon as they're up for rent, and I can charge them a higher premium, which I'm already doing, and I have written in annual rent bumps to each of the units that they're midterm renting. So I can count on every single year they're going up by 50 to 75 bucks a month per unit. So over the course of the next year, all four of these properties I can update. Plus, I can leave some of the cosmetic upgrades like paint and furnishings to the Airbnb specialists. So that's less money out of my pocket to make it attractive. Charge higher rent, and they're cleaning it more frequently. So I have a house hack that's able to generate me cash flow, generate other investors cash flow, minimizing costs out of pocket, all in a great area that's continuing to see investment activity.
Yeah, man, that's really that's one regret I have in one of the regrets in investing is if I were to start again, I would definitely start out with house hacking without doubt. I would buy the biggest property I can with FHA loan, exactly what you did. That's exactly what I would do. So yeah, cool.
It's because of individuals like yourself that I even got started in doing things like this. Talk about OPM, other people's mistakes or the lessons primarily. It's a better way acronym to use for it. Speaking to real estate investors who become wildly successful when they're on their career paths, almost every single person I talked to before getting started shared that exact same experience. If I could do it all over again, I would house hack with an FHA. And so that is largely what influenced me to take this path in real estate investing, because so many people point to that as this massive separator between how long it's going to take you to get started and how quickly you can scale up, which is why I love talking about how house hacking can help individuals, assuming they can pair it up with great market research too. So their house hacking goes from just barely breaking even, or maybe they're paying 200 bucks a month, to maybe being a house hack that generates them thousands of dollars of cash flow and still living for free. It's still a house
Right.
hack, but if we can increase the profitability on it, it just goes and scales so much quicker. So I do want to talk about real quick. I want to go back and talk about so people understand who house hacking is for. So primarily, it's for people who are just getting started and those who are already successful and want to scale their toolkit and help the next generation of real estate investors continue to find new ways they can start creating long-term wealth building. And the elephant in the room, if you haven't bought a deal yet, you might be thinking that you can't get started with this because you're not ready to buy your first property. You have the systems in place to scale your investing business yet. But here's why that's a mistake, and it can hold you back from success. Winning in real estate comes from making informed decisions, planning your next step, and as scary as it sounds, taking action even when you don't feel ready yet. That is what separates people who talk about making money in real estate and those who actually transform their lives and build wealth. I was a graduating college student, closed this property the morning of my 22nd birthday, saving money wherever I could, working for property management companies and Airbnb investors, saving absolutely all the money I could, learning everything I could, asking questions, and I didn't feel ready. I remember having almost a nervous attack a couple days before, like, what am I doing? I'm going to buy without ever having been to this property. All I've done is market research. Granted, I've been trying it out with other properties and it's working really well. But how do I know this is the right step for me? No one else in my family has ever done this. And you have those moments. But it's that taking of action, trusting in the data, trusting in the experiences of those dozens of people that you can speak to who've done this very thing, that helps you get over those feelings of I'm not ready yet and gets you into the greener pastures of I'm going to do it anyways. The only wrong action you can take when it comes to real estate investing or getting started with a house hack is no action, because it can truly be one property away from never having to make another mortgage payment in your life if you don't want to. One property generating $2,400 a month in cash flow, that's a lot of that's half, if not 70% of a lot of people's take-home pay. If you can do that once, wait 2 years,
So you
generate some
could
cash flow.
you could move to like Central or South America and live forever like a king. Yeah.
Exactly. It doesn't take that many properties, guys, especially when you're using, I'm going to harp this in, especially when you're using market research alongside it. So I have to ask, what would creating long-lasting wealth be worth to you? Is living rent-free or mortgage-free with thousands of dollars back in your pocket, how does that make you feel? It
Yeah,
should make
man.
you feel extremely
Okay.
excited because you guys can do this. I can do this. I'm nobody. I'm a guy who decided to ask a couple questions to figure it out. And I failed over and over again trying to make real estate work for me. And it was by leveraging market research that I was able to get to this point in time. So as a recap, to get started with this avenue, which I highly, highly recommend, either through single family, renting out rooms, using some short-term rentals to boost cash flow, or multifamily buildings. First off, identify your market. Are you going to live in the same neighborhood, zip code, city, or state when you do your house hack? Some people are going to have much more freedom that they can pick up and they can move to an area that maybe has better market dynamics to support their house hack. Others are going to be more tied down. Understand if you're moving or if you're not moving, what is your market doing around you? What streets are the best? What areas are appreciating the fastest? Where's the lowest crime? Is population and employment trends going in the right direction that guarantees there'll be demand for your housing? Are there nearby schools that any renter with kids is going to be looking at primarily to know where they want to live? All of those things are going to impact your investment. And it is crucial that you identify them beforehand because it will make the difference in if your house hack costs you money every month or if it's making you money every month. Second, start underwriting. When I started doing house hacking research, finding the right property, I spent maybe 20 minutes creating a calculator, little Excel formulas that put together. I can put in the purchase price, the estimated mortgage payment, and all the costs associated with the property, and it would spit out a red bar or a green bar. That's as simple as I did it. Red or green. Red is going to cost me money, green is going to make me money. And at that point, green just meant maybe 50 or 200 bucks a month positive. But you have to start. It took me 10 months and 65 properties to check it out. It was not something I did overnight, and I lost out on dozens that I thought were going to be my dream property. All it takes is a call to a realtor, pulling a list, managing some inventory, and checking consistently as things come up to find your perfect house hack. Third, apply creative strategies. My house hack, when I bought it, would not have worked if I went the traditional route of living in one and renting out three. It did work if I were to rent one of the units by room. And now it's working even better when I'm able to take one of the apartments and rent it out to a midterm rental arbitrage investor. If the property you're buying is single family, can you rent out by room? Can you Airbnb a unit out for more cash flow? Can you add an ADU, accessory dwelling unit, on the property to make it a house hack? The difference between a house hack being something you can actually take down that makes financial sense and one that doesn't make sense can oftentimes be the tools you have in your toolkit for how to maximize a property's potential. That's the end of my presentation talking about market research and house hack. I'd love to get in touch with each of you. You can find me on Instagram, Twitter, or you can send me an email at donato@brightinvestor.com. And I'll also invite all of you. Today, I talked a lot about how market research is critical in things like appreciation, crime, local businesses, schools, population and job, rent, vacancy. All those things can affect the success or failure of your investment if you don't know what's happening around you. I did make and co-found a company that specifically does that for you. It shows you all the market research trends to help make market research easy to maximize your long-term wealth building in real estate. And we're actually doing a demo for it in about 2 weeks from now, or sorry, about 1 week from now on June 22nd at 7 p.m. So if you're interested in being able to see the demonstration of how I took all the lessons in finding a house hack in market research and applied them into making a tool to help thousands of investors across the nation, I'd love to see you at that webinar in a couple of weeks.
Cool. Hey, thanks, Sean. Yeah, guys, if you have any questions, please either unmute or put it in the chat. A question I have for you is, so when you house hack, my understanding, at least back in the day, was you had to live in the FHA property for a year, and then you could go out and buy another FHA property. Is that correct? Is there a limit on how many FHA properties you could own?
So that is correct. So when you buy an FHA loan, you are you are obligated to make that property your primary residence for 12 consecutive months post-closing. After that point in time, 12 months, you can move out of that property and you no longer have to make the FHA loaned property your primary residence. However, you cannot have a second FHA 3.5% down mortgage until you refinance out of your first one. So if you buy with an FHA,
Okay.
you have to live there for a year. After your first year, you can move out, but you then can't go another. You can't get another FHA 3.5% down until you refi out of your previous one, which typically you would do once you've hit that 20% equity buildup over time, and you've dropped that PMI, and you can and depending on interest rates, you can refi that out, and then you can do another 3.5% down. So I highly
Got it.
recommend starting with a 3.5% down and then leveraging small local lenders to get 0 to 5% down loans after your first FHA one.
And then you said you were able to do your repairs after the close of the property, the FHA mandated repairs?
Yeah, so for the FHA repairs, we had to have going into closing, we had to have a bid from a licensed contractor that showcased exactly what the funds are going to be required after the FHA did their inspection. They gave me a document that said, here's all the things that have to be fixed in order for this to comply or meet FHA standards. We had to get that bid. That was part of our closing documentation. After closing, and actually pre-closing, I was required to wire that level of funds to the bank, which they then held in escrow just in case I
Okay.
failed to actually do the work and get it done. They'd had the money for it. So I had to wire the bank the funds that the FHA deemed necessary to have the contractor fix the property. Then after closing, I had to use other funds to go pay this contractor who came in and do the work. Then FHA came back out, inspected the property to ensure that post-closing and the post-work, it was up to snuff. And then they released my initial funds back to me post-close.
Okay. Got it. Okay. And then as far as the quality of the neighborhood or the data is concerned, like what's like the one indicator that if this neighborhood is trending upwards or downwards? Have you noticed if there's one thing that like really helps you identify which direction the neighborhood is going?
For me, I use something called the market recap. So recap is an acronym that we came up with. Rent, employment, crime, appreciation, population. Doing a market recap is the quickest thing that I do every time looking for if the area is going the right direction. First off,
So
it's rent.
rent,
Yeah,
yeah,
looking
employment.
at rent. Yeah, employment, crime,
Okay.
appreciation,
Okay. And
and
population.
population. Yes. To break all those
Okay.
down, start with the high and go to the more specific. Population. If people are not moving into your zip code or into your city at a significant rate, the demand for housing decreases, you are at higher competition for other landlords, and you will likely have to increase your occupancy. So you'll likely have increased a vacancy or decreased rental rates to attract fewer and fewer individuals. Having a population that's at least stable, if not growing, is crucial. And that can change from the macro to the micro market. Some areas can be losing population, some areas can be gaining population. And sometimes the biggest value add is where you're buying it somewhere that's on its way up over the next 3 to 5 years. But on top of that is also employment. Are people having the economic opportunity in that area trying to buy? Are jobs increasing? Because people follow the jobs. And if there's jobs in the industries like professional business services, healthcare, education, government, these are very typically stable jobs that people will move to be able to fill those positions and indicate that the kind of rents that you need to support cash flow in your properties are going to be provided by employers in the area. Next, appreciation. Over time, are properties in your area going down in value? Are they going up in value? What does transaction volume look like nearby? For mine specifically, on this street in Tower Grove, south of St. Louis, in this particular street, there's 3 active flips going on. 2 of them have already been finished, fixed up, and rented out. Another one got sold, another one's still in progress. And I can see how property values have slowly increased over time, showcasing to me that this area, so I slowly, I mean, even by multiple percents per year, like 5, 6, 7, 8% per year in this area is not consistently losing value. It's actually gaining value. And as I see investment activity happening nearby, that's forced appreciation on top of my natural. That indicates to me this is an area that I want to be part of and I want to buy something I'm going to hold for a while. Fourth, I have crime. Long story short, no one wants to buy in the war zone. I don't want to live in one. Renters don't want to live in one. Properties, insurance companies don't want to lend in one. Anywhere there's going to be high risk of property damage or violent crime is going to make your ability to rent that property out and maintain the integrity of your property structure without damage much more difficult. So we want to look at crime in the nearby area to see, is this area a hotspot, or is this area going to be generally safer, lower crime occurrences? And lastly, I'm looking at rent. I need to see specifically for two bedroom, if I'm buying a two bedroom, one bath house or apartment, I want to see what rent is going for in that area over the last 3, 6, 9, 12 months to get a very specific idea of if I buy this property and I get that information from the seller and they're telling me that their rent roll says their property is rented for $800 of a unit, and the market is telling me that this area is rented for 1,200 to 1,300, one of two things is happening. Either the market is getting such demand so quickly that rents continue to go up, and the quality of unit, although important, is not enough to degrade people coming into that area. They're so invested in being in this area they're willing to pay more and more to get in this area. Or two, the current property manager is not operating the property to its fullest potential, or the units might not be getting the investment that they need to continue to improve. But I'm going to use those rents to justify to myself if I'm buying in an area that's renting for 30% under the market or 40% under market, there is demand here and there's much more value add I can add to not only my house hack, but to the community, but providing more quality housing in the area that people want to be living in. So I use my market recap as my quick analysis. And if I like what's going on with the market recap, I dive deeper into nearby school rankings, businesses, things like unit vacancy, and more.
And then where are you getting the most real-time as you can on the population data? Is that like the census data, the most reliable information you can get?
So US Census is the most reliable you can get. Beyond decennial census years or between annual, they release the ACS or annual community survey that showcases updates to population. Anything beyond that is the specific company's proprietary algorithm projecting what they believe to be the population. Generally, they're all pretty much in line, but the US Census is the most accurate on a national level where you can get that information. A Bright Investor, I mean, my company the software that we founded pulls that, updates it for you on a national level, on a zip code level.
Got it. And then are you also looking at the trends like, which neighborhood is going to get a new Starbucks, which neighborhood is going to get a Walmart or Target? Are you looking at those trends also?
Absolutely. So I'm looking at things like build permits. So I want to find things like is there new construction build permits being issued in this area? Are there rehab build permits being issued in the area? What is the path of progress for this particular region? So if I'm buying in St. Louis, I know that Tower Grove, Central West End, Shaw, I know these neighborhoods are seeing a lot of investment in what we call the state streets in southern St. Louis. We're getting historically neglected, are seeing a ton of investor interest in a lot of development nearby. And that if for the in city of St. Louis, those areas are definitely the path of progress where more projects getting snapped up and prices are increasing. And then when it comes to news, I'm constantly going to be looking at local projects to see our Fortune 500 companies investing here. Is like Tesla or Amazon going to be deploying a new manufacturing facility or packaging plant nearby that can help attract jobs or attract investment? Or are there major real estate funds or capital groups who are going to be buying in large blocks and redeveloping them into mixed-use buildings, which is exactly what happened on Manchester Road here in St. Louis. Developers came in, put up 2 new luxury apartment complexes with restaurants and bars, mixed use down below, completely revitalized that whole strip. And now you have high-end wineries, you have new bars, you have a lot of young people, young demographics at a higher price point coming into that area because they were able to see the opportunity and I can track the development progress.
Got it. Yeah, man, that's super interesting. Yeah, I mean, it's all about knowing kind of where to invest, not just for not just for the short-term potential, but where you have really the long-term potential, investing in house hacking or rental properties. At the end of the day, everything that we're doing as real estate investors, the idea is to build long-term wealth. And if you can start investing in rental properties or house hacking properties, with long-term direction of your local area, I think that's not only do you make money from cash flow, but you make some really good money on appreciation also.
Exactly. It's been described before that cash flow is the short-term benefit, appreciation is a long-term benefit. And going back to my example earlier, People who bought legitimately Beverly Hills or like Southern California 40 years ago, 50 years ago for $35,000. That was legitimately what the average house price was back in Beverly Hills in 65. And we looked it up. Those houses are worth $1.5 million now. Do you think they care about $200 a month in cash flow over the last 40 years, or do they care if their property
Right.
appreciated by $1.4 million? All because they happen to buy in the right location, in the good market, that had solid fundamentals of growth. Those things are truly the wealth builders when it comes to real estate investing.
Cool. All right. Anybody else has any questions? I want to respect Don's time. Yeah, awesome, Don. Hey, thank you so much for your time, man. I appreciate it. And then, yeah, guys, for anybody that wants a copy of this, we'll email it out to everyone. And then, yeah, if you have any questions, please feel free to reach out to Don, and he can help you with the information on the data on the neighborhood and any questions on house hacking. Thank you, everyone. I'll see you guys at the next week call. Thanks. Thank you, Don. Thanks again, man.